Hello and welcome to Business Incorporated live on Channels Television. Well, it's the midweek trade right here and markets are buzzing. Here's what's coming up. As President Tinubu lands in the United Kingdom for Nigeria's first state visit in nearly 4 decades, watchers say this is not just diplomacy, it's a global investment pitch. And South Africa's annual consumer price inflation eased to 3.0% in February, bringing it squarely within targets. And global financial markets on edge as investors await today's U.S. Federal Reserve policy announcement. It's good to have you join us. I'm Ladi Williams. Let's dive straight into the markets now, starting with commodities. We're seeing oil prices of the Eastern Asian trade, early Asian trade today, retreating from recent highs after Iraqi and Kurdish authorities agreed to resume exports through Turkey's Syrian port. We see Brent crude, $103, still above $100, 0.18% down. WTI crude, $94.56, 1.71% down. A bigger drop there. Natural gas, that's also down big, 2.37%, losing that $3 mark. So that's a picture right there for energy markets. Let's get a check on what's playing out with metals now. Definitely we're seeing metals also giving up gains. Spot gold losing the $5,000 level. Spot silver losing 80. Platinum 2,097. Palladium 2.02% down. See copper also down there at $5.73. So investors there waiting, expecting what's going to play out with the Federal Reserve's stance there. Is it going to be more hawkish, or maybe we'll see some kind of dovish sentiment? We'll definitely be looking out for that. Moving on to other top stories now, we see for South Africa, still inflation reporting season. We see South Africa's annual inflation slowed in February, dipping to 3.0%, right at the Reserve Bank's target, offering welcome relief to the consumers and policymakers. But analysts warn that global oil and commodity price risk could push inflation up again, keeping monetary policy decisions under close watch right there in South Africa. Then we move on to East Africa now. Kenya's equity group said its full year 2025 pre-tax profit jumped to 52% year on year to about 92.1 billion Kenyan shillings as higher interest income and lower bad loan provisions that boosted earnings. The performance underscores resilience in its core lending business across East Africa, with growth driven by stronger net interest income and improved asset quality. And we see Nigeria is pushing a renewed open for business message to the global investment community as the government ramps up its international engagement following key economic reforms. Well, President Bola Tinubu and First Lady Senator Oluremi Tinubu touched down at Stansted Airport yesterday afternoon, marking the start of a landmark state visit to the United Kingdom. The visit, extended by invitation from Their Majesties King Charles III and Queen Camilla, is the first Nigerian state visit to the UK since 1989, and the first time a Nigerian leader will be hosted at Windsor Castle. But let's look at the business angle of all of this now. Joining me now is Mr. Johnson Chukwu, who is the Managing Director, Cowrie Asset Management. Great to have you on the show, sir.
Good to have you. Good day, Lade.
Yeah, so Nigeria is clearly selling a strong, reform story, but are foreign investors actually convinced, or are they still in a wait and see mode? Let's look at some of the data now. We see trade relations there between the UK and Nigeria. The last data shows that we did, have some kind of improvement when it comes to trade volume, but there's still a balance that we've not been able to, get there. The Nigeria is still importing more than it exports, to the UK. Then we also look at capital importation. United Kingdom is top, from the countries. Looking at the last data we got there, 48.8%, 2.94 billion came from the United Kingdom, according to the capital importation data from the MBS. The United States comes in second, and third, South Africa. So talk to me how you see this, state visit.
Well, Ladi, what I would say is that the state visit is a good public relations for the country, for Nigeria. I mean, it casts Nigeria in the positive image of a country punching at its own weight. So you see, in the past, when we see foreign leaders visit African countries, we feel a sense of jealousy. And when we also see African leaders rubbing shoulders with other foreign leaders, we feel a sense of left out. So, but the president going to meet King Charles, it's for me, it's a positive. It's a positive narrative for the country. But if you go beyond the positive narrative of the president presenting Nigeria's image, representing Nigeria to the world through this visit to UK, and you want to focus on investment, I would say that the UK, as in terms of trade, as a trade partner, has actually diminished its ranking as a trade partner to the country. If you look at total imports about $67 billion in last year. UK only accounted for just about 2.7 billion of total imports. China is in a commanding position, followed by India, followed by the countries like US. UK has lost its ranking in terms of as our import market. Granted that the trade balance is still in favor of UK. And then as an export market, UK only accounted of about $85 billion we exported last year. UK only accounted for about 1.9% of total exports. It's in fact, in terms of ranking, it ranked number 11 in the order of volume of trade, export trade we had. So as a trading partner, UK has lost its bragging position. But unfortunately, that is because of the changes in the structure of the UK economy and as well as the cost of production in UK. UK is now more of a service-oriented economy. But that does not take away the fact that UK, United Kingdom, is the country that we have the highest number of Nigerians in diaspora. So there are multiple nature of relationship between us. There's a huge cultural affinity between Nigeria and the United Kingdom. So this trip, this state visit, will further cement that cultural relationship existing between us. But in terms of trade, UK, United Kingdom is no longer, it's a very strong trading partner to Nigeria. But when you come to capital importation, they account for, if you look at total capital importation of about $16.78 billion that came in the first 9 months of last year, 2025, they accounted for about 50% of that, principally because a lot of foreign portfolio managers operate from UK. Like we know, United Kingdom is, particularly London, is now it's one of the international financial hubs, global financial hubs. So a lot of investors interested in African economies, African investment, operate from United Kingdom, but operate from London. So that could explain why a capital importation from London accounted for about 50% of Nigeria's total capital importation in the first 9 months of last year.
All right, so, looking at this, state visit right now, what would you like to see come out of it? What are your expectations so far?
Well, I think what I expect to see is that the United Kingdom should grant us some preferential import privileges, export privileges, so that Nigerian export, just like you have like African growth, an opportunity by the United States. So I think for us, because we are not yet at the level where we can compete in terms of cost efficiency or in terms of quality. So there must be they must cut us some slack so that we will increase our exports to the United Kingdom and further, because bear in mind that, like I said, the United Kingdom is home to the largest population of Nigerians in diaspora. So there are a number of homemade consumables that these Nigerians want to consume. So if we are granted some level of preferential import destination, import source, then we should be able to, that will encourage a lot more export and further strengthen our relationship with them. Beyond that, if you talk of United Kingdom being a direct investor in the real sector of the economy, I think that would be expecting too much, because even the United Kingdom as a country has almost outsourced or offshored its manufacturing activities. So if the manufacturing activities are not operating in England, I don't see how they will now be able to set up outposts in Nigeria. So we should just be content with what that country currently presents.
Okay, so you're saying right now that don't expect FDI from the UK, but I guess we can expect FPI, foreign portfolio investment.
Yes, yes, we can expect foreign portfolio investment. The United Kingdom is the largest source of foreign portfolio investment in this country because international fund managers prefer to operate from the United Kingdom when they want to invest in African economies. But in terms of foreign direct investment, I think it is far-fetched for us to expect that foreign capital on a long-term basis will be coming from England.
All right, definitely we'll keep tracking these visits and how it impacts trade relations between the UK and Nigeria going forward. Thank you so much, Mr. Johnson Chukwu, the Managing Director, CEO, Cowrie Asset Management. Thank you for coming on the show today, sir.
Thank you for having me.
All right, now let's pivot to artificial intelligence. There's a pressing question now. AI tools like ChatGPT, GitHub, Copilot, are they boosting students' learning, or are they becoming more of a liability there, where students are getting lazy to learn at this point with most of these AI tools? To help us explore this, join us now. We have Daniel Makburena as a data analyst. Joining me from the UK. Great to have you in the show, Daniel.
Thank you very much, Laddie. Hope you're well.
Yes, I'm fine. Thank you so much for joining us. So, you are a data mentor and AI researcher. Where do you personally stand, when it comes to artificial intelligence? We've seen a lot of students, trying to, learn more, with artificial intelligence, especially when it comes to, real coding skills. But is AI making them lazier, or what is it doing, in your opinion?
Honestly, it is both. I believe that this is why this movement is very important. AI genuinely accelerates learning, but also it can make students shortcut the process, and that's where the problem lies. So it's whether students are being taught how to use this AI. Obviously, most of students aren't taught how to well to use these AI tools.
All right, so Nigeria has a booming tech talent pipeline now. Given the specific challenges of tech education in Nigeria, limited resources, infrastructure gaps, do you think AI coding tools are more of an opportunity or a risk for students here?
Well, for Nigeria in particular, I think it's an opportunity because when students who are hungry to learn don't have access to seniors, then this is where AI will fill that gap. But for students in places like Lagos, Abuja that have this access to senior developers, and senior coders, using AI to shortcut the basic coding fundamentals will be detrimental to them. So I believe it's for students that don't have access to these seniors, but AI will fill that gap for them.
And we see there are tools like GitHub, Copilot, ChatGPT. Do you think they can write functional code in seconds? And at what point does a helpful assistant become a crutch that stunts a student's development?
Well, to me, if you remove the helpful assistant, what can the student do? Can the student do the code according to how they are taught or not? If you evaluate that, then you can understand if this AI tool is actually helping the student. If you remove this tool and the student can't, then the student is relying on this tool, so it is bad for them, in
Right.
my opinion.
We're already seeing, some professionals, relying a lot when it comes to artificial intelligence. But as someone who actively mentors, data professionals, what behaviors do you observe in students who rely heavily on AI, for coding versus those who don't?
Well, for me, it's the curiosity. Students who rely on AI, they just take the solution as it is. But students who use AI as a starting point, they ask further questions to further understand the problem and why this result is coming out. So it's more of how curious these students are. That's how I can engage if this student is using AI too much or not too much as a starting point.
We see universities, coding boot camps, they're struggling to assess, students fairly when AI can complete their assignments. From your experience, at BCS and Rexham, how should institutions respond? Is it ban AI, embrace it, or redesign assessment entirely?
Well, banning AI right now is like banning calculator in the 1980s. You cannot stop it. You will only slow it down. And it is coming, so we just have to embrace it. But embracing it fully is not how we should work. We should embrace it, but with guardrails, putting uh, stops that will make the assignment as we know if it becomes obsolete. So we should actually, it's not actually a bad thing, but we should put in guardrails to make sure that it doesn't stop students from learning the fundamentals of problem solving, which is very important.
All right, I guess at this point, if you're using artificial intelligence, just make sure you're also learning so you don't over rely on it and you miss some of the knowledge that you could actually gain. Thank you so much, Daniel Emakoroen, as a data analyst. Thank you for joining us today.
You're welcome. You're welcome.
All right, let's get a quick check now. Let's gauge the pulse of the markets. And we've seen for the African continent there, the NGX still above that major milestone of 200,000 points, about 7 basis points higher at intraday. Johannesburg Stock Exchange, that's continued in the downtrend there, 117,000, 0.25%. Down. Let's get a check on other parts now. EGX 30, a big 1.91%. We're seeing relief for North African stocks and also the Gulf region. The Nairobi Stock Exchange pulled back 0.25% for yesterday's trade. Moving on to the Middle East now, we've seen most Gulf equities they rose in early trade today, with Dubai outperforming as markets they're clawing back some lost ground despite the conflict in the Middle East. Dubai's main index there, 2.11% higher, 5,621. That was buoyed by a jump there, 7.2% jump in top lender Emirates, NBD, and a 5.2% gain in blue chip developer, that's MR Properties. Then we'll see for other parts there, Abu Dhabi index 0.95% higher. We'll flip over now to Saudi Arabia and Qatari index. We'll also see is positive sentiment. Previous weeks, these indexes were hammered, lost so much ground, but we'll see if this continued gain there, if it actually continues, going forward. Renewed vigor right there in the market. Let's get a check on U.S. Stock futures now. We see it. They're also in the green. Relief also seen there as, crude prices have dipped and traders are awaiting the Federal Reserve's rate policy decision. So we're seeing positive sentiment there. Maybe it's priced in already. Investors are expecting a hold today. We'll see if that happens later on. Let's get a check on Asia now. See Asia markets also firmly closed in the green earlier, 5.04% Kospi. We've had our eyes on this one. It's had big swings, either up or down in the previous trading weeks. Hang Seng Index 0.61% higher. Flip over to the Nifty 50 in India, 0.81% higher, 23,771 points. We'll see if the Nifty 50 can regain the 25K level again. Let's take it on to Europe now. We have Lars Holter right there in Europe. Great to have you, Lars. Are we seeing the green on the screen in Europe?
Yeah, Ladi, it's good to be with you. We have a mixed picture. We have some green, and as a matter of fact, it was a really strong start here in Europe for pretty much all the markets across the board, all in the green this morning by about 1%. But then it turned, and right now we're seeing London and the DAX in Frankfurt rather flat with a little bit of weakness, losing a fraction. Paris and Madrid at this point still in the green, but much closer to the baseline as well. So we're seeing some investors still pick up shares that have fallen steeply over the sudden outbreak of the war in Iran, but that is much more a little technical rebound than it is due to fundamental changes. As for the economy, investors here are obviously looking at Washington. You were just talking to yourself about the Fed, and you're absolutely right. No one is expecting a rate change, but it is still going to be interesting for investors here to just listen to what the Fed, what Jerome Powell is talking about, considering the crisis we're in. And it's especially interesting for us here in Europe because tomorrow the European Central Bank is getting together for their very own interest rate meeting.
All right, I guess at this point it's not what the Fed does, but what Fed Chair Jerome Powell says. They'll be looking for those hawkish undertones. But we see Germany's economy has been going through some rough times, but the government, has helped kickstart things again last year with a gigantic investment package. 1 year later, there's a report out on its effectiveness. What is it telling us?
Yeah, Ladi, it's not a good report for sure. Several economists, as well as study groups, have looked at the original plans and compared them to what really happened over the past year. Let's start from the beginning. Last year, after 2 years of recession and stagnation, the government put together these two massive investment packages: 500 billion for defense, 500 billion for infrastructure, in an effort to jumpstart the economy. But while millions actually went into worthwhile projects, including measures for climate protection, energy, hospitals, and health infrastructure, a lot of money was spent there, but at the same time, a lot less money came from the regular budget. So in many cases, investment measures that had been planned already were simply financed now out of the newly created pot instead of the budget, whereas funds from the regular budget were then used to plug holes that had appeared elsewhere in the government's finances. And now analysts are saying that the effect of these special assets were pretty much minimal, with only around 1/10 of the funds really going into new projects, really funding projects that would create jobs that would have otherwise not been there.
So what's the government going to do to fix this?
Well, that is entirely unclear, because the money from those funds is now largely gone. And mind you, it was not criminally misused or so. It was indeed spent on worthy projects, completely legitimate. It's just that by reducing regularly scheduled expenses in the general budget, the government freed up some funds to cover older issues, apparently completely missing the point of what they were supposed to do. It's very disappointing, especially as this happened while Germany's traditionally biggest parties, the Christian Democrats and the Social Democrats, were in a coalition, which is still ongoing, of course. So you can also not just put this on one party, hope for someone to right the ship after the next election. It's just that apparently they have to do better. Analysts from the IFO Institute for Economic Studies, that is one of the more significant institutes in Germany, they're pleading with the government to up their regular budget investment again to fix this, because they argue without massive investment, Germany will just fall more and more behind on a global scale.
All right, thank you so much. Lars, we'll see if this renewed vigor with these markets, if they actually continue after the U.S. Fed chair has spoken. Thank you so much.
Thank you, Ladi.
All right, now let's get a quick check on what's playing out in the crypto market. And definitely we're seeing red on the screen there, with investors in the crypto market there taking some funds to the side at this point. We see Bitcoin 1.78% lower. Ethereum, that was making a run for about $2,500. We're seeing a pullback there, 3.26%. And stable coins, some stable coins in the green, showing investors are trying to run into safety. Some of the top headlines now: we see U.S. Securities and Exchange Commission. They've issued the first formal interpretive guidance clarifying when cryptocurrencies should be treated as securities, marking a major step towards legal certainty. The document emphasized that many cryptocurrencies may not qualify as securities under federal law. The 68-page interpretation provides a clear taxonomy and addresses years of uncertainty that have shaped enforcement actions right there in the U.S. Now we see PayPal. They've announced the expansion of PayPal USD, its dollar-backed stablecoin, to users across 70 markets worldwide through the PayPal accounts. The rollout covers regions including Asia Pacific, Europe, Latin America, and North America, with users in remaining markets to gain access in the coming weeks. Now we see MasterCard, long known for its role as a global payments network, is taking a big step into the world of digital assets. The company announced it will acquire UK-based stablecoin infrastructure firm Bank for up to $1.8 billion, signaling a push to modernize its payment rails for the rapidly evolving fintech landscape. So that's how most of the markets are looking today. We're seeing some making major recoveries today. We'll see if it continues right after the U.S. Fed speaks today. Thanks for watching Business Incorporated. I'm Ladi Williams. Bye for now.